Welcome, future CPAs. If you're a Gen Z accountancy student gearing up for the LCPA, you are exactly where you need to be. So go ahead and open up those digital notebooks, flip your phone to D&D, and let's get into this minimalistic, zero-distraction explainer masterclass on Philippine excise taxes. We're zeroing in purely on the high-yield, highly testable sin products, alcohol and tobacco. And hey, my goal here isn't just to help you pass a quick quiz tomorrow. No way. We are building what I call a 3-year retention lock, meaning this stuff is going to stay totally fresh in your mind for when you finally sit for those board exams. All right, let's dive right in.
To guarantee that 3-year retention, we're going to chunk this out into 6 quick sections: the anatomy of sin taxes, alcohol categories and exemptions, traditional tobacco and cigars, modern vapes and heated tech, compliance and official stamps, and we'll wrap up with a LECPA rapid bullet review. It's all about building that mental framework.
All right, Section 1, Anatomy of Sin Taxes.
Okay, so here's the absolute foundational definition you really need to burn into your brain. An excise tax is an indirect tax. But here is the massive, super crucial distinction you've got to remember for the exam. Unlike VAT, which, just sits around waiting for a sale or exchange to happen, excise tax is a tax on production or importation. Literally, it hits the exact second an item is manufactured in a factory or cleared by customs. Oh, and remember, this is paid in addition to VAT. It absolutely does not replace it.
Now, the Philippine government calculates this tax in 2 totally distinct ways, and you absolutely must master this split. First, we have a specific tax. Think of this as being locked to the physical realm, like how many liters, how many kilograms, how many packs. Then, on the other hand, we have an ad valorem tax. This one is locked to value, specifically, what's the selling price. Now, in the LECPA, every single sin product is going to fall into one of these 2 buckets, or, sometimes a mix of both. It's like a giant sorting hat. This is the core framework you'll use to analyze literally every product we cover today.
Moving right along to Section 2, Alcohol Categories and Exemptions. So check out how alcoholic products are grouped into 3 main types: distilled spirits, wines, and fermented liquors. Now, I really want you to pay attention to the tax-based mechanism for distilled spirits, stuff like whiskey and rum. Actually, examiners love testing this specific point because it uses a mixed tax base. It charges a 22% ad valorem tax based on the net retail price, plus a specific tax per proof liter. It's a double whammy. On the flip side, wines and fermented liquors, like your standard beer, rely purely on a specific tax based on volume capacity. If you can clearly picture this categorization in your head, you are going to avoid one of the most common, sneaky traps on the boards. Now let's do a quick active recall loop. I want your brain to actually guess the answer before I tell you. What about native Filipino drinks? Think about the local provinces. Do you think they're subject to the same strict specific taxes as, say, massive commercial beers? Go on, just take a mental guess.
Boom! Did you get it? Here is your ultimate study hack for this. TBT. Tuba, basi, tapuy. These native alcoholic drinks are 100% exempt from the fermented liquor excise tax. No tax at all. So whenever you see a question about fermented liquors, just immediately scan those multiple choice options for TBT. Seriously, drop this little mnemonic into your notes right now so that exemption is permanently burned into your visual memory.
Let's jump to Section 3, Traditional Tobacco and Cigars. Wake up, everyone. I've got a classic trick question for you, straight from the tricky minds of the board examiners. Are hand-packed cigarettes taxed differently than machine-packed cigarettes? Now, decades ago, the answer to this was actually yes, which is exactly why using outdated review materials can completely mess you up. But today, beware the train law trap. Under current Philippine law, specifically amended by the train law, that old distinction is completely 100% gone. Hand-packed and machine-packed cigarettes now share the exact same schedule of specific excise taxes per pack. So, bottom line, if an exam question tries to throw different rates at you for hand-packed versus machine-packed, well, you instantly know it's just a distractor trying to trip you up. Let's quickly contrast cigarettes with cigars, just to reinforce that recurring theme we saw earlier with alcohol. Cigarettes are strictly a specific tax. You just count the packs. Easy enough. Cigars, however, they mirror the complexity of distilled spirits. They have a mixed tax base. You've got to calculate a 20% ad valorem tax based on the net retail price, and then you add a specific tax per cigar. Seriously, always watch out for that mixed base. It basically forces a 2-step calculation.
All right, Section 4, Modern Vapes and Heated Tech.
First up in the modern era, heated tobacco products. The absolutely crucial, most important phrase to remember here is without burning. We all know traditional cigarettes require combustion, right? Well, these newer products just heat the tobacco electrically to release an aerosol. So the very second you see the phrase without burning or combustion on a multiple choice question, ding, 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 you're looking at the legal definition for a heated tobacco product, which comes with its own specific tax rates. Next up, we have vapor products. This covers your standard e-cigarettes and vapes. The law specifically targets the e-liquids or gels containing nicotine that rely on mechanical heating elements, things like batteries or circuits. And honestly, whether it has a cartridge, a tank, or neither, the law throws a wide net and captures it under the excise tax umbrella. Try not to let the tech jargon intimidate you. For tax purposes, it's really just another volume-based specific tax on the liquid itself. Section 5. Compliance and official stance. Let's trace the required compliance flow in the real world. Remember earlier when I said excise tax hits at the exact moment of production? Well, this is exactly how the Bureau of Internal Revenue actually proves you paid it. Step 1, you produce or import the alcohol. Step 2, you must legally affix Internal Revenue official labels. Basically, think of these as official tax stamps. Step 3, only after those first 2 steps can you legally remove the goods from the factory or customs. Those stamps absolutely must be physically attached before the goods ever leave the facility. If the BIR does a surprise inspection and finds unstamped bottles sitting around in a warehouse, yeah, that is an automatic, massive red flag for tax evasion. There are also some super strict administrative requirements you should probably memorize. First, as we just said, those official labels serve as absolute proof of excise tax payment. Furthermore, taxpayers are required to submit a sworn statement of volume of sales, and the deadline for that is within the first 5 days of every single month. Oh, and here is a super specific kind of quirky detail that examiners absolutely love. Microbreweries are required to register with the BIR and install non-resettable meters. Why? Well, because beer is taxed purely on volume. A non-resettable meter guarantees that every single drop produced is accurately counted and, more importantly, taxed appropriately. And finally, Section 6, our LCPA Rabbit Bullet Review. Okay, here is your 3-year memory lock. These are the top 5 most testable concepts, totally designed to stick in your long-term memory. Ready? 1. TBT. Remember, tuba, basi, and tapuy are completely exempt. 2. Always distinguish a specific tax, which is based on volume, from an ad valorem tax, which flexes with the selling price. 3. Watch out for those sneaky traps. Both distilled spirits and cigars use a mixed tax base. 4. The train law trap. Hand-packed and machine-packed cigarettes are taxed using the exact same schedule now. And 5. Those official tax stamps must be firmly affixed before any removal from the production plant or customs. Before we wrap up, I want to leave you with a provocative little thought exercise. This is going to force your brain to actively apply everything we literally just learned. I want you to think like a true licensed CPA right now. Okay, if a specific tax is permanently locked purely to physical volume, and an ad valorem tax flexes up and down with the selling price, how do you think extreme inflation uniquely affects the government's tax collection on distilled spirits compared to fermented liquors? Really think about it. Which one uses that mixed base, and which one relies purely on physical volume? Analyzing complex scenarios exactly like that is what's going to take you from just being an accountancy student to becoming an absolute top-notcher. Thanks for learning with me today, and definitely keep reviewing those mental frameworks.